Now, even in the past guidelines, as far as I remember, there was a distinction between mis-selling and selling the product which suits the customer. Now, with the new guidelines which has been put into place, how much of the difference will be there? Is it more of a responsible conduct or the norms being in place?
Thank you very much, Anurag, first of all, for having me on your channel. Well, when it comes to mis-selling, I think this was something which was brewing for quite some time, and it was engaging the attention of the government as well as the regulators, both at RBI as well as IRDA level. I would say that a couple of years back, there were some practices which were initiated by various responsible institutions, acknowledging the fact that banking is something which is a business of trust. So if at all it's a business of trust that unless and until it's a right selling, there could be a challenge to its very basic brand. So that is one of the reasons why some of the banks on their own had also introduced uh, some kind of a need assessment. Need assessment formats were introduced, and also uh, they had started coming down quite heavily on the mis-selling. They had actually delinked the incentive structure from the sales targets, and if at all the sales targets were actually having a due focus on the bank's own products also. So I think this is something which was introduced a couple of years back, even 4 or 5 years back also this was introduced. And then on the top of it, banks had started looking at the persistency ratio, because the mis-selling also means that the persistency ratio should be low. So this is something which was being done. But these are all steps which are taken at a voluntary level, at a board level of the banks. But now, in this particular guideline which has been introduced by RBI, one, mis-selling has been defined very clearly. And secondly, they have also gone to the extent of saying that it might even have an impact on the lessons of the organization also, lessons of the bank also. So actually, punitive measures which have been defined in this policy, they are very strict and harsher also. So I think this is something which is a very clear reflection of the intent of the regulator in terms of ensuring the implementation of the mis-selling guidelines. So I would actually put it in this context that, if at all you look at the the premium which was mobilized by the insurance sector last year was somewhere to the tune of about 9 trillion, and out of which the credit life kind of an insurance premium was just about 30,000 odd crores. So if you really look at it, overall size, it does not really make much of difference. But nevertheless, the experience of the customer, if at all they are being cheated, this is going to have a significant impact on the trust factor, which might even jeopardize the trust of the customer in the banking structure also. So I think to that extent, it's a very welcome step.